makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. Here's what's coming up on today's program. High Treasury yields weigh on risk appetite as Fed officials renew uncertainty over the timing of rate cuts. We discuss the inflation outlook and the banking sector in our exclusive conversation with the chairman of Societe Generale, Lorenzo Bini Smaghi. We're also live in Johannesburg as counting continues after South Africa's election. The ANC's political dominance is on knife edge for the first time since the end of apartheid 30 years ago. And the British Prime Minister, Rishi Sunak, pulls the Bank of England into the general election campaign, making the disputed claim that a vote for the Conservative Party is a vote for interest rate cuts. So let's take a look at the European markets, Matt. There's been quite a lot going on, a bit of volatility this week as we look at some of the data that we have had in Europe and the U.S. Now, global equities in general are actually headed for their worst week since mid-April. This comes amid a daunting realization that maybe rate cuts in the U.S. are not likely anytime soon, with inflation still sticky. Now, we had another weak U.S. auction result on Wednesday, and that really heightened worries in certain parts of the markets that funding the U.S. deficit will drive up yields at a time when the Fed is in no rush to ease policy. S&P futures down 0.4%. You can see European stocks gaining 0.2%. So the Fed's Beige book has pointed to the U.S. economy expanding as a slight or modest pace across most regions since early April. Now, it says consumers are pushing back against higher prices. This comes as the Fed's Raphael Bostic also says that inflation is moving to the target range, but pressures remain. Well, joining us to talk monetary policy, inflation, and everything in between for an exclusive conversation, Lorenzo Bini Smaghi, of course, chairman of Societe Generale, a former executive member, board member of the European Central Bank. Lorenzo, as always, thank you so much for joining us. I mean, there's a lot going on. The markets are really pricing in cuts, not cuts. They're a little bit all over the place. Is it because sticky inflation could surprise us, or is there a risk of a recession even in the U.S.?
Well, there are many concerns. I think the U.S. economy is stronger than expected, but it is supported by a fiscal policy which is much more expansionary than Europe. And the question is, will the ECB dare cutting rates while the Fed doesn't? I think for next week should be a done deal. I don't think the ECB will surprise the markets. The question is more, what about July, September? I think the ECB will want to wait and see. They won't commit. September is likely, but it will depend a little bit on the data incoming. I think the ECB wants to be sure that it will not be surprised, like the Fed maybe was earlier on, to promise something they cannot really deliver.
So is the main concern actually that the market understands that once they cut, I guess there's going to be gradual cuts? Or is it that it's the first time that the ECB and any other central bank is not really cutting in a recession?
Exactly. But if you look at inflation, and monetary policy is restrictive, I mean, at the levels where they are. You see this in the bank lending data, in all the underlying data. We haven't had a very strong recession. There is a recession in Germany, and you see that in the wage behavior also. So inflation is coming down, is projected to come down. It will be surprising if the ECB didn't cut rates. The question is the pace, how quickly they will cut rates.
How quickly do you think they'll cut rates? And again, there's all this tightening that we still have to really see the effect of. And I don't know whether it's lagging or it's because it's a funny economy because of COVID.
I think they will want to see the forecast. So September is the next forecast after June. So I expect September and then maybe the end of the year. So three cuts. I mean, don't make me make a bet, but.
But it'll be gradual, basically.
It will be gradual, yes. I think that will be the
case. When you look at, I guess, what the ECB has been doing, I feel like it's hard to be the first one to cut, right? When the BOE is probably delaying it, and the Fed could also not cut at all this year. Is the gravitational pull from the Fed going to be strong? Yeah.
Well, you don't want to be the laggard all the time. I mean, the ECB was late in hiking rates. You don't want to be late in cutting rates either. So the situation is clearly different from the US. So if they delayed, they would be remembered in history as making two mistakes, which you don't want that to be.
You sit in an enviable position of understanding banks and understanding some of these market forces that could potentially also change the supply chains and kind of how we do trade. Where do you see the global economy headed? Are we deglobalizing? Do you see concerns of everything being redrawn a little bit?
Well, there are some short-term developments. Clearly, what's happening in the Strait, in the Red Sea, what's happening in other parts of the world. But at this stage, I don't see a huge change in the globalization. Clearly, China is a very special case, but you see other emerging markets popping up, strengthening Mexico and elsewhere. So globalization, I think, is here to stay, to be frank, and that's good for everybody. Of course, you have to be able to manage it, and to manage it and to manage risks, the risks that are implied with this. So I am relatively optimistic over the medium term. Growth is coming back in Europe. It's going to be gradual. There are huge challenges ahead. But if we look at the last 2-3 years, especially after the start of the war, nobody expected Europe to be where we are today, I think.
And do you see that in your clients? Are they saving more? Does it feel okay as an economy?
I think European corporates are doing relatively well. I think they're improving. They see that there are opportunities globally. Of course, there are huge issues in Europe in terms of, are we able to compete with the US, with the rest of the world? What about, continuing the single markets? Maybe we'll discuss this later. These are the key challenges, but the opportunities for companies are there.
So what do you see as your main challenge? We've been waiting. I feel like we've been waiting for Capital Markets Union for all of my lifetime.
Yes.
Are we any closer to actually getting something concrete that means that, your bank and other European banks can maybe a little bit be stronger compared to the US?
I think this is the big political issue in Europe. We need to integrate more, but we have to realize that there are political forces within our own countries that are against. And we have to face that. And politicians, the heads of government, have to face that. There are resistances, like in the past. There were resistances to monetary union, to banking union, now to the capital market union. And the politicians have to be strong enough to push back. Also because some of these resistances come from people that are close to them, the regulators, the national supervisors, some of the market infrastructure who have maybe a monopolistic position in their own country and are afraid of competition. But unless we create a real market in Europe, then what we observe is that companies are moving the other side of the Atlantic, and the attractiveness of Wall Street compared to Europe is so strong that heads of states have to realize that. I mean, this is in the news, discussions of companies that want to relist somewhere else or that are under pressure. So I think it's really a political issue, and we have to be able to support this. And banks, I think, are very favorable to that.
I mean, we do see it both in the UK and also in France. A lot of the companies, especially some of the oil-rich companies, saying, "Look, maybe there's more capital in the US. I'm thinking of delisting and going over there." What does a capital markets union actually help with? So it brings investment. Does it, help to deal with the AI, the green transition, and common defense?
Well, first, it helps financing all the transitions that Europe has to make. Climate, digital, of course, now the defense chapter. You can't expect this to be done elsewhere. So you need to have a pool of capital and savings that is able to finance. Public money is not going to be sufficient, and politicians know that. So you need to have the investors and the savings directed to that. And without a capital market, we won't be able to do that. So we need it, we know it. Now it's the politicians who have to take the tough decisions.
But would it help with securitization or kickstart the securitization
Sure.
market? Like, what do you want? As priorities for the CMU, there's a number of lists. Like, what would you do first?
Well, I think, securitization is key. I mean, we need a single rule book and a single or a uniform supervision and implementation of this rule book. If every country is defending its own little market, 27 little markets, because they think that by defending these little markets, they support their companies, the only result is that these markets will shrink, and there's not going to be a capital market in Europe anymore. So there is no future for the national markets. You need a bigger market, and in order to do that, you need to bring under the same rules the largest stock exchanges, the non-European, the large asset managers. I mean, we did this for the banks, so you have to do the same. It's not always as easy, but you can't allow arbitrage. You can't allow regulatory arbitrage. And I have to say, you cannot allow that non-European large institutions can pick and choose the best regulator they want in the union, just by arbitraging. This is not possible.
But so do you think that basically we need, big common supervision of exchanges, like Börse, Deutsche Börse and Euronext, even before investment bank?
I think that's, I mean, if I had to suggest something to Macron and Scholz, is to commit to bring their the two key stock markets in Europe under the same rule. Then supervision doesn't need to be a single one, but it's a joint, like we have in the banking system, joint supervision, but the same, so no arbitrage. I think that would be a big push to avoid this incentive to protect your little backyard.
And also insolvency laws? Where does that come? I mean, certain policymakers,
I'm not sure
or is
that
secondary?
insolvency laws are so. I mean, for securitization, for instance, you are not going to securitize a mortgage, put together a German mortgage and a French mortgage and an Italian mortgage. They're just so different, not only from bankruptcy laws, but in terms of type of instrument. What you want to do is to securitize the German mortgages and sell them everywhere. And for that, you don't need a uniform bankruptcy laws. We have to be careful not to put too many things on the agenda, because then it will make the union impossible, because there's so many things to do, and people are afraid of changing too many things. We need to go to the key priorities.
Thank you so much. Lorenzo Bini, Smaghi, chairman of Societe Generale, will be back with us shortly. We'll discuss the outlook of the banking sector more in depth. This is Bloomberg. Well, still with us for an exclusive conversation on monetary policy, inflation, and banking, Lorenzo Bini, Smaghi, chairman of Societe Generale, former executive board member of the European Central Bank. Thank you so much for staying with us. Now, we're just talking about the Capital Markets Union, but there's also baby steps, I would probably say, against, for a banking union next month with the deal on how to also deal with some of the smaller banks that failed. Do you think you can or that discussions can be reinvigorated on the next steps, including joint deposit issuance?
Well, I mean, sure. I mean, we can't progress on capital markets unless we also progress on banking union. And to be frank, the biggest obstacles to banking union is not so much, it is, I mean, to complete the insurance scheme and so on, but also to eliminate all the barriers to moving liquidity, bank liquidity across Europe and capital. And this is in the hands of the regulator, the national regulators, the central banks. I mean, those who are sitting around the table of the single supervisory mechanism or the European Central Bank. So I mean, maybe we should put the lights on those authorities that should maybe we should take away the discretion that they have.
But for all of your years of experience, and the politicians, you speak to politicians, you understand exactly what some of these countries want. I mean, Germany wants one thing. Would the Italians agree to it?
Well, things have changed dramatically over the last 10 years. 10 years of banking union, single supervision. You look at the solidity of the various banking system. 10 years ago, people were concerned about the solidity of the banks in the south.
Yes.
Now, if you look at market capitalization, if you look at all the parameters, you're not concerned about that anymore. I think, the system in the different countries is strong. So the next step, banking union had two key objectives given to the supervisor: solidity of the banking system and integration. The first we achieved, the second we failed. I think the supervisor has to ask, why is this happening? And I cannot say it's just the fault of the banks. I mean, there are clearly some barriers for that to happen. And one of these barriers is the liquidity within the system, which is not flowing openly, and the capital also, which is not flowing. And this is due to the measures that some regulators still can take to prevent this mobility. These measures are taken out of fear that if a bank fails, where will the capital go? I think this needs to be addressed, also because the system is more stable today, so these fears are not justified.
Will we see cross-border consolidation? Emmanuel Macron spoke to our editor-in-chief. What did you make of comments of the French president saying he wouldn't be opposed to a foreign takeover of SocGen?
I think I would expect all countries, all heads of state to say the same. They should not oppose deals which are done in other sectors. We've seen mergers in all sectors in Europe, but not in the financial sector, not cross-border mergers. And for this to happen, you need the conditions, and the conditions have to be set by the regulators, by the market authorities, because you need to create value out of a merger. Otherwise, your shareholders are not going to support it. And in order to do that, you need to create the synergies, and you need to create an advantage for growing. And today, what's the advantage to grow in a market which is fragmented?
But do you need to get bigger to actually counter also Wall Street banks?
Yes.
Would it make it easier? And so what's the future of SocGen? Are you thinking, like, I need to protect it to make it stay independent? I want to be an acquirer? Like, how do you think about all these big questions?
I think all banks have the same, all banks that have a systemic position in the markets and are active, in particular in the markets, in investment banking, they want to compete with the U.S. institutions, so they need to grow, they need to be solid, they need to access a strong market. So we need to create these conditions so that really the large European institutions can compete. And this should not be seen as a source of fear for the smaller institutions in Europe. There is, like in the U.S., a role for larger banks, a role for medium and smaller banks. But you need to give the opportunity for the larger banks to grow. And to grow in Europe and outside Europe.
I could talk to you for 3 hours, but just a final question. If Donald Trump comes into the White House, is there going to be an unfair disadvantage with the U.S. banks? Is he going to deregulate? And where does that leave European banks?
Well, that's a big issue today, even before Donald Trump is elected. It's not clear what will happen to Basel IV. In Europe, there's no rethinking. Actually, there is the implementation, but other things are coming on top of Basel III, the whole climate agenda, the whole revision of models. So the impression is that the game is not over. There is no end game in Europe, while in the US the end game is more or less decided, and it could be even shorter than than what we expect. So there is an unfair competition between the US and Europe, and the politicians in Europe and the regulator cannot have a blind eye on this. Otherwise, we are at a competitive disadvantage.
Lorenzo Bini, Smaghi, thank you so much, as always, for coming on today. He's, of course, the chairman of Societe Generale. Now, coming up, the South African rand weakens on projections of election results. So more on that next. And this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, the rand is lower today. This as a projection says South Africa's ANC will fall well short of a parliamentary majority for the first time since taking power 3 decades ago. Now, let's get straight to the latest with Bloomberg's Jennifer Zabasajja, who's in Joburg. Jen, so what else do those projections show? And good morning.
Morning to you, Fran. Yeah, this is very fascinating. So this is coming from a government agency, and it's called the Council for Scientific and Industrial Research. It is a 2% margin of error, and really what it is showing, as you mentioned there, the ANC is on course to win 42% of votes cast in Wednesday's national election. But we should note that still right now, we're seeing just almost 14% of voting districts actually counted. So there's still a bit of a ways to go. But, it's notable, right? Especially as you noted, that this could potentially be the first time that the ANC does not have a majority in 30 years. And we also see this projection showing that the Democratic Alliance, which is the main opposition party, likely to win just over 22% nationally. The EFF, which is the party really led by Julius Malema and known as the Populist Leftist Party, potentially garnering 9%. And the MK Party, which is just over 6 months old, it's led by former President Jacob Zuma, potentially garnering just over 12%. But again, we're still waiting to see more votes coming in.
Jen, thank you so much. Jennifer Zabasajja there in Joburg, of course, looking at all this closely. Salesforce has also said its sales growth in the current quarter will stall to its slowest in its history, fueling concerns about the company's ability to stay relevant. And you can see pre-market down 16%.